Hi guys, welcome back to my channel. So it's another day in the evil markets of Forex. So if this is the first video you're watching of mine, I've been trading for a year and 3 or 4 months and I'm still not profitable, but I feel like I'm going in the right direction. And something I'm doing is just documenting each trade I do to like show my progress. And yeah, I thought I would show you the trade I took this morning on my personal and my FTMO account. So I thought I'd show you the first trade I took on my personal account, and I took the same trade on my FTMO account, which I got a 3% gain and I risked 1%. So I took this trade because I went down all the time frames, the monthly to the weekly to the daily to the 4 hour to the 1 hour to the 15 minutes. So I started on the monthly and just kind of worked my way down. And when I got to here, I noticed that the price is basically, if you go to the weekly time frame, you see it's come down, it stopped all these people out. So I see that as like price is now looking to go up, but before price goes up, it doesn't just go up, it like basically the whole market just zigzags constantly. And my theory is the big banks, I hate all the buzzwords I said before, but all the big players are constantly stacking their orders like rapidly, and that's why it's always like, oh, I feel like my stop loss gets hit, or I feel like I'm constantly being stopped out, because the market's constantly just going up and down, up and down, up and down on like smaller scale to the bigger scale. So you need to like synchronize all the time frames together to like execute your trade in like a good position to try and make like profit or some percentages. I worded that really weirdly, but yeah, I went to the weekly, saw that, then went down to the time frame, saw that price last on the weekly stop these people out. Then I noticed here that price had come down below these lows, so then I went further down to the 4 hour, and then here I saw price has come down, stop these people out, and it's looking to now curve back up. But like I said before, it just goes up. Prices doesn't just shoot up, because if it was that easy, everyone would be making money. You have to like plan it well, like matching the patterns within patterns. So we're in a downwards pattern, which means the money's going down to then further go up. So that's like a good sign looking to take a buy. Wait, let me just quickly check this position. Okay, I haven't been stopped out. Yeah, so then I went down to the 1 hour. Again, I'm looking to take a buy because it all matches up. So I saw that and then went down to the 15, and then I took my position in here because I saw where, if you can see it, sorry, it's going down then going up, then going down then going up. So I noticed that we went down and I took a buy in here and then went down to the 5 minute and saw again there's this pattern of like the bearish flag looking. Whenever I see price zigzagging down, that means it's likely to go up, and when I see it zigzagging up, it's going to go down. So when I saw the zigzag, I saw that as like an indication that price is looking to go up, because again it matches with all the other time frames because they're working in sync with one another. So then I went down to the 1 minute because I use all the time frames, and I actually took the buy around here, which was way too soon. I should have waited for like this confirmation bit here. But if you can see here, so remember we're all in sync with the other time frames to go up, but now we've gone past that low on the 4 hour, the 1 hour, and now on the 1 minute, and it's slowly curving around. But this pattern is like a bearish flag, it shoots up buy, bearish flag shoots up buy, and then here would have been a perfect time to get in because it then came down below the old lows. And you see these two mini patterns here where it's like flagging down, shoots up, flagging down, then it shoots all the way up. So yeah, that's why I took that position. And yeah, I'm risking way too much on my personal account, but it's money I'm willing to lose. I'm just gonna try and, because the good thing, because this is like concepts I kind of learned from Falcon, but put my own my own like spin on it. But then the reason why, because I remember the Mark and EB guy was talking about positioning yourself in the market is the most important thing, because now because when you just use like the hour time frame or the 15-minute time frame, you're not using the other time frames, you don't know where you're positioned in the market to understand where price could potentially go later on. So because I know that we've shot down, and then on the daily and then the 4 hour we're making that flag, I know I'm positioned for it potentially to go further up, but again it could just come down and stop me out, but I know it has the potential to continue on, so I could trail my stop loss and make more money. So I'll talk about this position here. I placed this trade twice. I risked 1% for 3%. I placed it like 15 minutes ago and then took a 1% loss because I took it way too early. But again, a loss is a loss. It's like inevitable. You're going to take losses in Forex, which is like a hard reality to learn. It takes a lot of pain, and my god, I have lost so much money. But yeah, I'll talk why I took. So this is GBP AUD. I always chart on TradingView because I just find it more clear. Let me go to GBP AUD. Yeah, so I do the same thing. I go to the monthly, to the weekly. So here, we're like, you can see it's come up here. So the price in the bigger scheme of things is going to go down, like in the next coming weeks and months. It's going to go downwards. But before, what I would do, and I'm sure other people do, is when you just look at one time frame, you think it's going down, take a sell, but you don't know it's going down because it's in a certain pattern to make money to then go up, to make that money to then go further down, if that makes sense. So we know in the long run we're going down, but again we need to use all the time frames. So we know we're in this pattern here. So this is like a bearish flag, so it's looking to go down, but within this bearish flag there's this pattern, there's a pattern here. So then if I then go down to the 4 hour, you can start to see the patterns within that pattern. So I saw here, price here came down below this low. So I'm looking at that price most likely in the short term is going to go up because it's come down below here, potentially. So then I go down to the 1 hour. Again, you can see price has come down below this bit. Let me just make sure I'm still in this trade. Oh, perfect. Yeah, so now I know it's stopped these people out, and it's just stopped these people out here. It's looking to potentially go up, but before I take the buy, I then need to go down the time frames again to make sure they all sync up to take that trade. So then, like I saw, I'm waffling so much. Again, I'm looking to take a buy, but I need to make sure I sync the time frame. So I then go further down to the 15-minute. And like I said, when I see a zigzag going down, that shows me that it's going to go up. But if I just looked at this with this time frame, I have no idea where it's sitting within the market. But because I've gone down all the time frames, I know whereabouts this is positioned, which is to go up, and it's below this low here. So then I go down to the 5-minute, and a second ago I took the trade here, and then I got stopped out for the 1%, but I should have waited. So then I went down here, and then it zigzagging down, and then it shot all the way down to stop all these people out. But now it's then shooting up to continue on to go further up the market, and when it then shot down here, I took the buy here. And a clue I've noticed, just an interesting thing, a theory, when sometimes, like when I feel like, oh, this is a good trade to get in, it looks like it has a lot of potential, I notice that the spread shoot up, and I use that as kind of like a confirmation, or like a bias that I'm sort of in a good position, because it shows, I think this might be wrong, but it shows that there's a lot of like participants and a lot of money entering, people are entering loads of orders at that point because the spreads go up so they can handle it, I think. And then now you can see these mini patterns within mini patterns is like bearish to go up. And then when it breaks out of this, then that's like even bigger confirmation that we're now leaving this zone to go further up. But then that's the thing, when it breaks up, it's then going to then keep going down again to then shoot up. And that's where, when I first got into Forex, or like when you're really new, and I still am new, I start to look back now and be like, oh, that's where, because when you see the price shoot up, you take a buy, but you're not knowing that the price is then going to go down to make more money to then go back up, if that makes sense. But yeah, because this is like based off the Falcon strategy, what's so good about it is that, like I said, because you're positioning yourself in a good part of the market, you know that, like I said, it has the potential to go further up or go lower, and you can try your stop loss and make a higher percentage. And all of this is just risking 1% as well, which is like really good, because again, if you win 2 trades, you make 6%. You could then lose 3 trades in a row, and you've lost 3%, and you've still made 3%. So that's why, like, losing, yeah, so like I'm learning to be a good loser, because it's like here, do you see the market is now shooting up? Maybe actually it probably won't at the moment. Not me thinking I know what I'm talking about. But yeah, I've been having a lot of success for this at the moment. I'm still really new to this kind of thing. I'm just a tip, what I've been doing. Normally the market's like this, but what I've been doing is I zoom, get to a certain point, it switches the look of it. If I keep zooming, here it goes to a different, and I find I can see the patterns more clearly when it's like in this sort of position. But yeah, so, and what I do to try and find trades is I mostly use the daily time frame, but again I use all the time frames, but I just look where price is, like here for example, if you were to set this back and you at the market at this point and you see it shoots down here, that's when you want to then start going down the time frames and try and sync them up to look for the point in the market where it then shoots upwards to take the trade. But again, like, there's no way it's 100% success rate. No strategy is. You're going to lose a lot of the times, but because sometimes I win 3% but then lose 1%, I'm being at this point profitable because I'm winning 3% and losing only 1%, if that makes sense. But yeah, sorry I waffle so much, but I'm so passionate about this because I've been trading, like I said, for a year and 3 months, and I've lost so much money, but I feel like I'm sort of going in the right direction now. But yeah, hopefully that made sense a little bit. I talk like I'm really bad with my words, and I like just makes no sense sometimes. But the way I look at it, if anyone's like new to Forex, again, I've only been trading for a year and 3 months. I'm still not profitable, so I'm probably not the best person to take advice from. But whenever you see, you want to be looking, like if you see price shoot up, it's green, the candle's green. I see that as like, not all the time, but I'm like, I don't want to be getting in there because that candle might be shooting up to then go down because the candle's shooting up to like make money to then go further down, because when you use the other time frames you see where you are positioned in the market. And like I said, I've been using, again, the spreads, when I see spreads like all of a sudden shoot up, that's kind of like another clue. I see that I might sort of be in the right direction. But yeah, thank you for watching, and I hope you have a good day.